Every single day, we're bombarded with economic numbers, right? GDP, inflation, unemployment, they get thrown around on the news like we're all supposed to be experts. But let's be honest, what do they really mean? Well, today, we're going to build a toolkit to help us look past those confusing headlines and actually understand the real story the economy is telling. It's just a constant fire hose of jargon, isn't it? One report says the economy's booming, the next is whispering about a recession. It can feel like it's designed to be confusing. But what if I told you that buried inside all that noise is a clear, understandable story about your money, your job, and your future? And here's the good news. You don't need an economics degree to figure this stuff out. Nope, you just need a simple way to decode the language. And believe me, once you have it, you're going to start seeing the news and the world in a whole new light. Look, this isn't some boring academic exercise. This is real life. This is about knowing how to get the best return on your investments. It's about being able to judge the economic policies you vote on. It's about making smarter business decisions or even just understanding if now's a good time to ask for a raise. It's about turning all that noise into knowledge you can actually use. So this is it. This is our Decoder toolkit. It's just 3 critical questions, but they are incredibly powerful. Number 1, who made this number? 2, is this number going to change later? And 3, what's the time frame they're using? Let's dive in and see how asking these 3 simple things can totally flip the meaning of a statistic. All right, to put our new toolkit to the test, we're going to start with the big one, the heavyweight champion of economic stats, gross domestic product, or GDP. You hear about it more than any other number, so it's the absolute perfect place for us to start digging. Okay, so here's the main idea behind GDP. It measures the value of everything produced inside a country's borders. And the key part is it doesn't matter who owns the company doing the producing. So if a foreign car company builds a factory in, say, Ohio, every single car that rolls off that assembly line gets counted as part of America's GDP. It's the standard yardstick for just how big an economy is. So you might be wondering, how on earth do they calculate a number that big? Well, it's actually pretty clever. There's a fundamental rule in economics. The value of everything that's made, that's the output, has to equal the money spent to buy it. That's the expenditure, which also has to equal all the money people earned making it. That's the income. So statisticians can measure GDP these 3 different ways, and each method acts as a double check on the others. It helps keep the numbers honest. Now, you might also hear another term thrown around, GNI, or gross national income. The difference is subtle, but it's important. While GDP is all about where the economic activity happens, GNI is about who gets the profits. For most big countries like the US or Germany, the numbers are pretty close, maybe a 1% difference. But for a country like Ireland, which has a ton of foreign companies operating there, its GDP can be almost 20% bigger than its GNI. Big difference. But you know what? GDP has a massive blind spot, and it's called the shadow economy. This is all the stuff that happens off the books. We're talking every cash-in-hand job, every undeclared transaction, all of it. And this is not just a little bit of pocket change. For some countries, this invisible economy represents a huge, uncounted chunk of their real economic activity. Okay, so now that we've got a handle on what GDP is, let's put our new Decoder toolkit to work. This is where it gets fun, because we're going to see how asking a few simple questions can completely change the story a number is trying to tell you. First question, who produced the figures? You gotta know your source. You see, data that comes from an official national statistics office, like the US Department of Commerce, that's generally considered the gold standard. But if the number comes from a private market research firm, it could still be useful, but they might have different methods or even a different agenda. Knowing who's behind the number tells you a lot about how much you can trust it. Second question from our toolkit, will this number be revised? And the answer is almost always a big, fat yes. The first number you see in a headline is usually just a flash estimate, a first guess. Check this out. In the first quarter of 2006, U.S. GDP growth was first reported at a strong 4.8%. But a few months later, once more data came in, it was revised up to 5.3%. That's not a tiny adjustment. That is a huge jump that could totally change how a company or a government thinks about the economy. And that brings us to our third and maybe the most important question. What's the time frame? Oh man, this is where data can be spun to tell basically any story you want. Take a look at this table. It's the same exact data, just compared differently. If you compare business orders to the previous quarter, it looks like they fell by 2.6%. Pretty bad, right? But wait. If you compare it to the same quarter last year, orders are actually up 2.6%. And if you annualize it, Suddenly, orders are up a massive 6.4%. See? Same data, completely different headlines, recession, recovery, or boom, all depending on the comparison period someone chooses to show you. This is also why you'll often see data that's been seasonally adjusted. I mean, it's no surprise that retail sales are way higher in December than they are in February, right? So, seasonal adjustment is a statistical trick that smooths out those predictable ups and downs so that we can see the real underlying trend. It helps us avoid getting fooled by the calendar. All right, let's zoom out. When you start piecing all these individual numbers together, they start to reveal much bigger patterns. Economists call them trends and cycles. And understanding these is the key to seeing not just where the economy has been, but maybe, just maybe, where it's headed next. So economists see two big patterns. Think of the trend as a highway that's steadily climbing up a long mountain. That's the long-term, slow and steady growth of the economy over decades. But the cycle, that's the car we're all driving on that highway. Sometimes we speed up during a boom, sometimes we have to slow down for a recession, but we're always weaving around that steady upward path. Economic growth is never just a straight line. This chart shows it perfectly. Each of these bars is just a single year of growth. Some years, we're going a little slower than the long-term trend. Other years, we're hitting the gas and growing way above the trend. Every single news headline you read about the economy booming or slowing down is really just describing one of these bars. It's telling you about the short-term cycle, but it often forgets to mention the long-term trend. So who's actually in the driver's seat of this economic car? Well, it's us. In most big industrial economies, our personal spending, everything we buy from our morning coffee to a new car, makes up a staggering 60% of all economic activity. Our collective choices are the single biggest engine powering this whole system. And this, right here, is why all of this matters. This isn't just theory. This is your life. The value of your 401k is tied to the economic cycle. Your chances of getting a promotion are tied to it. The price you pay for groceries is part of it. Understanding this stuff isn't about being an economist. It's about being an informed citizen and taking control of your own financial life. So if you only take one single thing away from all of this, let it be this. The data does not speak for itself. Numbers on a page are meaningless. They need context. They need to be questioned. They always, always need a critical eye. And that's really the power of this simple toolkit. Just by asking who will it change and when, you go from being someone who just consumes the news to someone who actively analyzes it. So the next time you see a big economic headline, you won't just swallow the number whole, you'll question the story behind it. And that, my friends, changes absolutely everything.